Welcome to All About the Bay. I'm your host, Paula Joy. Every week we interview exciting people in the Bay Area, small business owners that have exciting products or services. Today with me is Gina Wong. She is a living benefit specialist. You're going to learn a thing or two. So am I. Bonjour.
Bonjour.
Tu vas bien?
Bien.
Oh, wow. Okay, cool. I didn't know you spoke French. Huh?
Comme ci, comme ça.
So what else do you speak?
I
Mandarin?
speak English. I speak Cantonese.
Okay, good.
Conversationally.
Good. I'll teach you French then. I'll teach you French.
Oh, oui, oui.
Okay. Good. Okay, cool. So today we're talking about living benefit. What is that exactly?
That is a great question. So a lot of people, they know life insurance because it is a life insurance product.
Okay.
But I like to call it anti-life insurance.
Anti-life insurance. What's that? What's wrong with life insurance?
Okay, so life insurance has been made for death, right? So if, let's say, for example, if someone were to pass away, whether it's a breadwinner or one income were to go away due to a death, you basically get it only after death, right? Which is important. But from now until death, I know that something's going to happen. And it might not be death first. It might be an illness, a heart attack, stroke, or cancer. You want to make sure you have those financial resources in case that does happen. So one of the companies I work with, and I work with multiple companies, so I always offer the best product to my clients. Yeah, I'm a broker. So with that, there's 3 puzzle pieces that we all will go through at some point, right? Die too soon. Do you have a magic globe when you're going to pass away?
I don't know. I just know I'm going to heaven. Jesus.
Hey!
Hallelujah. Praise the Lord.
Me too.
Okay.
It's between me and God, right?
Exactly, yes.
So die too soon is a huge problem because
Yes.
we don't know, especially with COVID, you never know what's going to happen, right? The second puzzle piece is becoming ill. I don't know when I'm going to get sick. You don't know when you're going to get sick or even disabled, right? Whether it's temporary or permanent. And this is truly one of the reasons why I got into life insurance or anti-life insurance. So 2006, my dad actually had stage 4 lung cancer. Business owner, had the life insurance where you had to die, had the long-term care policy. You know, my mom kept saying, oh, when we die, we're like, okay, well, I don't want to hear about you dying. And then she said, hey, if we get sick, you can use the funds to take care of us. Let me tell you, it was very limited. It was, hey, you have to get reimbursed. Okay, so we have to pay for it first. Then it's not a medical expense that we approve of or an agency that you hired from. So we had to pay a lot of things out of pocket. And mind you, I mean, medical insurance doesn't pay for everything. So you have to make sure that, hey, if I'm not going to be covered throughout, like for everything under my medical insurance, what about all my other bills? Mortgage, right? You're in mortgage. Who's going to pay for my house if I can't work? Who's going to pay for my car note, food on the table, utilities? So that's a huge puzzle piece that a lot of people are not covered. And the third one is living too long. I mean, I know we talked about, you know, I want to live a long, healthy life, right? But what if I do and I run out of money? That is a huge problem, especially in the Bay Area, right? So that's the 3 puzzle pieces I love.
Okay, so
tackling.
if I understand it right, you said basically one is dying too soon, right? And the other one was
becoming
ill, right? And which is kind of sad. And the one is basically living too long. Okay, that's interesting because you know, I see the world so beautiful, and we spend time getting the education and everything else. And then the sad thing is that any of these things can happen to us, right?
Oh yeah.
But it's just a reality.
Yeah, it's reality,
Okay,
and it's nothing
right.
that we can control. We can be the youngest, the
Right.
healthiest,
Yeah,
right?
yeah.
Exercise every single day,
Right.
but
Yeah.
we can still get ill.
So what you're doing is providing some kind of protection against those 3
Yes.
events.
Yeah.
You could call them events. Anything can happen to any of us. We're not sure at all.
Yeah.
You know, because we're just humans. You
Yeah.
know, and anything can happen.
It's all about peace of mind.
Right.
Because
Yeah.
how many times I've seen, oh my gosh, in the last month, I can't even tell you how many GoFundMe personally that I've seen come through my text messages, through my Facebook links or whatnot.
Yeah.
And it's, you know, one example is one of my friends, she knows that I do insurance. So she said, oh my goodness, my friend's husband just died from a stroke, leaving his wife and 4-year-old son, left no life insurance, was not working. Now she's like having to sell everything in her house, selling her puppies that she just got, everything just to pay for funeral expenses.
Oh my goodness. And how much is that? Like at least $6,000.
I mean, depending on what kind of funeral you want, right? If you want to get cremated, okay, cheap. But then if you want a burial, a plot, a viewing, everything, it could cost up to $30,000 depending how extravagant, right?
And then if you're from abroad and you want your body to be
exactly,
then it costs more.
My boyfriend said, my mom wants to be shipped to the Philippines and be buried there. And he goes, well, where's your money for me to transfer, to ship you over to the Philippines? And so these are the things that you have to think about prior to something happening. So my mission is to talk to people before it happens, because you don't buy car insurance after something you get into a car accident. You don't buy life insurance after you get sick, because you're not qualified after that. So it's always to do it before, so that you have that peace of mind, and then you can always leverage life insurance.
So let's talk about dying too soon. That's life insurance. So you die too soon, like you
That's
said.
the traditional kind. That's what everyone has.
Right, exactly.
Yeah.
Because you're saying basically like that person you mentioned on Facebook, the husband died, and she's a young, and I know a friend of mine, the husband died, and same thing. They had a big house, and there was no insurance. It put such a strain on her, so that's one, dying too soon. And then the second one is basically, it's what? It's getting ill, right? It's getting ill. So let's talk about that one. Everybody knows about the one, dying too soon. Okay, you have all these bills, have a mortgage and all that kind of stuff. Most people buy their houses when they're in their 30s, or, and you're in your 30s, and before you hit 40, you have insurance, but you have this huge mortgage, especially living in the Bay Area.
Yeah.
You have a mortgage that's $800,000. So your wife or the other spouse, has no choice but to sell, right? And how about your kids? How about the government's going to step in?
What about their education?
Yes, exactly. That's what I was going to say.
Right? Their education. Like, I'm sure that every parent wants their child to go to college. But how many GoFundMes say, hey, can you also raise money for the final expenses? But, this gentleman left 4 kids now. Now there's 4 college funds
they have a widow right there.
Yeah. And now it's, it's so sad, but this is reality.
Let me ask you this. Why is it that, okay, even though it's a reality, and that so people are just like not too much akin to getting this thing?
So that's a great question. So life insurance has always been about death.
Yes.
Right? And every person that I've had an appointment with, they're like, I didn't know about living in benefits, just like me. When I learned about this in 2018, I had no idea, because my mom knew about life insurance, you had to die, and long-term care. I had no knowledge of living benefits. So when I heard about it, I heard that it came out in 2007. And when it first came out, and it was actually launched by a National Life Group, when it first came out, all these other insurance companies were like, that's dumb. Why would you do it? Why would you allow people to access it while living? I'm not even talking about cash value. I'm talking about death benefit. And they're like, oh, we're going to keep to the old way. While this one company, National Life Group, they basically just revolutionized the whole insurance space. So with that, other companies 10 years later started adding, oh, we also do living benefits too, but it's only terminal illness. So people are still not knowing about living benefits, but if you come across an agent like me that is sharing their, shameless and, more proud and loud, then you're lucky to have come across someone. But other than that, some people go to online. They go to policygenius.com and buy a life insurance policy. They don't talk to a live person like, hey, how much insurance do I need? Oh, I think I need $100,000. Is $100,000 going to be enough for your family if you were to pass away, get sick, or disabled? Is that enough?
No.
Not at all.
No, certainly not in the Bay Area. Okay.
Exactly.
So what's the difference between long-term care and this life benefit you talk about?
Yeah.
Living benefit.
Yeah. So let me use my dad's policy as an example. So long-term care, it's, you can only use it for certain expenses. So this one, my dad's was medical bills that were approved. So let's say my dad, when he got sick, he's very into Chinese medicine and healing. He used a feng shui guy. He also went to the Chinese medicine, to get like this big jar for like $1,000, and it had like dry seahorse, snakes, and turtles in this jar. It's $1,000. That's medicine.
Snakes?
Yeah.
Wow, tunnels?
Oh, Chinese people. Oh, yeah.
Oh, goodness,
Yeah.
okay.
So he would pour a shot every day, and it's supposed to cleanse his body. That's Chinese medicine, but in the policy, that's not considered a medical expense that's proved. Also, with that policy, it was only approved medical expenses, approved agencies that you hire from. My mom wanted someone that spoke Chinese, someone that can live in the house like 24/7. We couldn't find that. It was very limited access, and so when we, this reimbursement, when we hired someone, we paid, we submit the receipt, they're like, oh, you didn't hire from an agency. It's kind of like a closed network kind of thing. So living benefits, if you have a policy, make sure you can have ample access. It's, for us, it's, hey, knock on wood, if someone got sick, we give them a check. If I gave you a check for $1 million today, what's the first place you go to?
If you give me a check,
But you have to. It's a check first before you go and spend it on. I don't know.
what, you give me a check, I'll go to the bank, put it in the bank.
Exactly.
Right?
What does the bank do?
What is the bank gonna do with the check?
Yeah.
It depends on what I tell them to do.
Yeah. You put it's cash.
Yes. Yeah.
You use it for whatever, wherever you want. It's not limited.
Okay, maybe you should go into detail with that one. So, okay, you got right. So let's say, okay, living benefit is like, all right, you got the stuff, you get a policy, and somebody tells you you're gonna die, okay, in 6 months or something like that. So then you cut a check. Okay, here's the thing, you bought this policy, Paul, right? Yeah, go enjoy your life.
Yeah.
Is that what it is?
Yeah, you can do whatever. So let's say, for example, using your example, you have you said 4 months.
Let's say I had 4 months.
4 months. Okay, so let's say you had 4
Before I
months.
go see Jesus.
Before the heaven
Praise
gates
you,
open
Lord.
to you. So let's say 4 months, right? So with our terminal illness, it's if you have less than 24 months of life to live. You basically can access up to 90% of your death benefit. So let's say, Paul, you had a $1 million policy. $1 million. You have 4 months to live. Okay. Company says, hey, Paul, you can access up to $900,000. How would that make you feel?
Oh, that very good. I would see basically leave the legacy I always wanted to,
Yeah.
right? So it help people while I know, hey, when they come to my funeral, it's just, yeah.
I love that guy.
I sponsored this school, right? I did, and I did this, it's like I'll be the great Samaritan, right? And because I want on the other side, the big man gonna say, well done, good and faithful servant, right? And so, so that's what I want to hear. So I'll do whatever it takes to help people. It's not for me to go bench and I don't go drink.
Yeah. I mean, there's some people that will like, hey, I want to go on a YOLO trip. Like, if I'm going to live for the next 4 months, I told my friends, I said, if I were to have a terminal illness, I'm going to take everyone that I want to spend my dying days with on a trip to Europe, and it's all expenses paid by me.
Right.
Or
Exactly.
there's one guy, one of our clients, who actually put in a claim in. He had like a bone marrow cancer, right? He was like, well, I'm going to die anyways. I'm going to access the full amount that the company will allow me to access. Received a check for $850,000. He said, woohoo, I'm going to die. I'm not going to leave anything for my kids and my, So he finds this treatment where they were able to clone his bone marrow.
Yes, that's what I was going to say. Because that way, could you use that money and find something? Go somewhere. Somebody has the cure for that
Experimental treatments.
Right. Yeah.
It's cash money. You can use whatever you want.
Right.
This gentleman got better. It just gave him more opportunities, more hope, more options.
Now tell us, okay, this policy is expensive or not?
No,
compared
so
to term life and all.
Yeah, so we have term, we have whole life, we have index universal life. It's really based, we customize a policy for each person. Term is, of course, cheapest because you only have it temporarily, but you can always convert it into a permanent policy. So permanent, you can have the cash equity savings in the policy, and you never lose it as long as you fund it healthy, and you don't have to pay the rest of your life. I know that some people are like, well, I don't want to pay when I'm 90 years old. Okay, how long would you like to fund it? Okay, this is how much you would have to fund it. You can stop at 25 years, let's say, for example. Not have to pay a dime anymore. You have the cash equity savings, and you get it until you're 120 years old.
So somebody, okay, let's take this example. Someone's 35 years old, okay, and they're watching this. They're 35 years old, and they want to, oh man, I like what I'm hearing. Okay, I'm 35 years old. I don't know what's going to happen to me when I'm 40 or something. I'm just getting married, and I want my beautiful wife to have a great life and stuff like that, and myself to have a great life too. So they buy a policy for $1 million. How much is going to be the cost, like on average?
It
Today they're
depends.
healthy.
So yeah, so let's say 35. It could be $35 a month for a, healthy 35-year-old.
It'll be $35.
$35 for a term policy.
Is that no? Okay,
It could be a 10-year,
Yeah.
20-year,
yeah.
15.
But I'm just trying to say, okay, this living benefit policy, is that going to be a term life or
It
what's
applies to all. See, that's the misconception, because that's how old life insurance is, right? Oh, you have to buy whole life in order to access it when you're sick. That's old traditional. But the thing is, what they don't tell you is, it's only your cash value that you can access if you got sick. So imagine, let's say you had a policy for 10 years. The cash value has grown to $40,000, but your death benefit is, let's say, $1 million. If you were to get sick, which would you rather access, $40,000 or $1 million?
$1 million. Yeah.
So that's what National Life Group, they changed.
Okay,
they
so I guess
revolutionized.
sometimes I get confused with insurance companies. Okay, so you have paid contributed only 40,000, but you availed yourself to $1 million. Is that how? Okay,
It's too good to be true, right?
yeah, exactly. Is that because not a lot of people? Okay, I know they have actuarial science and stuff like that. They have some statistics that they're relying on. Okay, but for a layperson, it's like, man, too good to be true. You know what I mean? I only paid $40,000. It's like you say, okay, Paul, contribute only for the number of years, this X number of years,
Yeah.
right? Okay, in the next 10 years, contribute. And after that, you only contributed $40,000, and you have this living benefit for $1 million. And then anything happens to you, you get that money.
Yeah.
So, I mean, can you work out the math here?
Yeah. No, and that's a valid question. A lot of people ask me that. They're like, why would an insurance company give me that much money, right? Number one, it is too good to be true. You know why?
Because it's true.
You have to qualify.
Right.
Not everyone can qualify.
Okay. But what are the qualifications?
Well,
Just health.
let's say health,
Yes.
right?
Yes.
If you already had it, like let's say, for example, one of my friends had a stroke last year. 46, came out of nowhere. Can she qualify for
No.
a policy? No, right? But the average American, 2 medications to sustain the levels of whatever it is that they have, that's an average American. So let's say 2 medications for high blood pressure or whatever it is. That's an average American, you can be approved. But they do a medical background, they do a pharmacy background, they do a light credit check. And they're like, okay, let me assess. Why I didn't get the best health rating was because I had speeding tickets. Because Gina is fast too furious, you know? But it's a thing, you have to qualify. And let's say, for example, for a term, that's why it's so cheap. Let's say $35 for a 10-year policy, for $1 million policy, right? But let's say 10 years go by. I'm 40. Let's say I'm 50 years old. I don't have the policy anymore because nothing happened to me. The company keeps all the premiums that I just paid for the last 10 years. But now I have to go shop around for another policy at 50 years old. Now I'm 10 years older. Now it's more expensive for me. But at the end of it, they do a risk assessment. Okay, how's Gina's health? Does she take care of herself? When was the last time she went to the doctors? Does she have cancer in her family? And I had my dad who had cancer, but I still got approved. But they see my background. And then they approve me, and then they're like, okay, well, Gina's going to live it looks like she's going to live a long, healthy life. She's been putting the contributions into their policy, and then let's see what happens. But there have been people who got into car accidents 4 months after getting a policy, disabled, temporarily, got $60,000 while doing PT for a wheelchair. Now it's all better, but never had to pay the $60,000 back because he accelerated from his death benefit.
Wow, that's amazing. So, all right. So, how can we help you here within the Bay?
Oh my goodness. So my mission is to talk to people before it's too late, right? And the more people I talk to, it doesn't necessarily, I'm not saying, hey, Paul, go find me people that want to buy life insurance. That's the last thing people want to talk about, right? But it's the first thing people check, right? So my plan is to talk to more people, spread the awareness about living benefits, because if someone already has a policy, you know what I do with them?
Come forward.
I go, let me review it. This is what you have currently. I outline, I highlight. Okay, it looks like you have death, a little bit of terminal illness, or maybe they don't have terminal illness, I upgrade their policy. I say, hey, for the same amount that you're paying this for this policy, you can get this and living benefits. You have 4 additional riders that you don't have. Would you like to upgrade? That's how I serve. I don't say, hey, you need this, you need this, you need this. I say, hey, does your current plan fit your plan for your family right now? So my goal for All About the Bay, which I've gone to one mixer, and it seems like you have amazing people, which I love, all different backgrounds from all different parts of the Bay, which I loved. And I got to meet awesome people. That's like the best part.
Right.
And I know that networking is all about knowing someone, and then it's like them branching out, and then they become kind of like your sales people, right? Essentially. But it's knowing, okay, hey, Paul, I trust you. I'm going to send people to you when they have this need, like mortgage. You know, then you're like, hey, Gina, someone just closed a mortgage deal with me. They had this like their second, property or something. I know that they need to have living benefits. I know you. I like you. I trust you. You know me. You like me. You trust me.
Yeah, I think that's very good. So I think basically, I learned stuff here. This living benefit that basically you're paying $35 a month, and it's like maybe you pay for 10 years or even 5 years. It doesn't matter. Something happens to you, and right away you can avail yourself to that money. I mean, come on. This is something everybody should know.
Yeah.
It's something everybody should buy.
Yeah, and if your financial advisor, anyone's financial advisor, does not know about living benefits, you better connect them with me. Because I've had my friend who said, oh, my financial advisor told me to go to policygenius.com. What? And then he said, oh, you don't need living benefits. Your medical bills are going to be all paid for by your medical insurance. You better get that in writing.
It's just like telling somebody, hey, you know what? You don't need any savings. You just rely on Social Security.
Yep.
And you're getting $1,500 a month.
Yeah, what is that going to do? Especially in the Bay Area. You're going to have to move to another country.
Yeah, exactly.
Yeah.
And you got into this because something happened to your dad.
My dad,
Yes.
yeah. And what's crazy is, so I live in the house that I kind of, well, not really grew up, but since 99. And so the office downstairs has always been my dad's office. And then it became his caregiving room. When he got sick, he couldn't go upstairs anymore, so we placed him downstairs. That's where I caregave for him. And then that's where he eventually passed away. For the longest time, I didn't want to use that office, or I was avoiding it. I even got paint for the walls. It was sitting there for 6 months, and finally my roommate said, why aren't you painting it? And then when I totally transformed the room, it felt so good because it kind of came full circle, because the work that I do, it's in honor of my dad. I don't want anyone to have to go through what my family did when he was sick. So it's definitely a passion of mine.
That's good. That's good. That always happens, right? And so again, thank you for watching this. And Gina would really appreciate just talking to you and helping you out, right? So thank you so much. This is Paula Joy.
You can contact me at 510-828-7631, or you can email me at gina@living-benefits.co. And you can also visit our website at agentsofchange.today. Agents, like life insurance agents, not Asian, okay? But you can also watch me on Instagram. So it's living life with _Gina. I hope to see you guys soon. Thank you so much for watching.
Thanks for watching. If you know of any small business owners who would like to take advantage of our lively interviews, please ask them to contact us at service@allaboutthebay.org. And remember to subscribe to our channel as we post new interviews there weekly.